Hello and welcome. Today is the 11th of July, 2017. My name is Derek and welcome. Let's take a look at the precious metals for today. But before we do that, let's take a look at some of the fiat currency charts, starting within the daily dollar index, currently in at 95.72. And we can see that since this point in here, after resisting the 18 average of lows, had a higher low to this low pullback, but has already made a lower high in here, and it's leaving this band, barely breaking down below this previous support. So this is a situation where you think there could still be some further decline, as it is just leaving the band and more downside room. You don't think that there's a good chance that this support, sort of like in here, would be held, and another leg lower would be in store. And when you just look at the entire run of this from 2017, and you're seeing 1, 2, 3, 4, and now what looks like 5 lower highs and just as many lower lows, well, you would think that the gold and silver markets would be going bullish, but that has not been the case. So now let's switch this over and take a look at the Canadian US dollar cross, because I think that's important in regards to the precious metals. This is the monthly chart spanning back to the early 1990s. And if we look at when the tops and bottoms occurred within this, we can see that it sold down all the way to around 2002, 2003. And that's when the price of silver actually started to bottom and went higher. And it went higher up until about 2008. And just a few months before the silver top was a top on the Canadian index. This was in the middle to late 2007, or later 2007 rather. And the silver market and gold market topped in March of 2007. And then, of course, the big financial crisis where everything was going down, pretty much everything bottoming late 2008 into early 2009, which is when, of course, this one did as well. We can see in here. And then this tops in 2011, which is when the precious metals topped as well. Tops and bottoms are known after the fact. So is this a bottom? Well, after the fact hasn't been completed yet. As for this to have an up move, it's got to have a decent play above the 18 average of highs, as was the case the previous 2 times. And for the breakout stage or a reversal in trend, after seeing several resistance tests and a long decline in here, step 1, flatten the band, which we can see in here. That's barely resistance established, but the correctionary move within this sideways action is pretty interesting and productive. Let's shrink the amount of periods so it's easier to see for the current time. And within this, there's the sideways correction. The month of June had this big green candle month, which started at the 18 average of lows and completed at the 18 average of highs, or from the lower end of the range to the upper part of the recent range. Of course, we can see it even extends a little up towards here. So how does this June month handle? And if it can hold this month in around this area, a little bit above 76, even around 76, and that's a bullish sign, to say the least. That doesn't necessarily mean it's going to break out of it, but how you follow a decent move, there's definitely good reason why I could have even a green move, or any situation into August that does make it towards this point. But breaking out above here is really what I'll be looking at, around the 81 to 82 handle. And at that stage, that could mean the reversal within this particular trend, and maybe tests back to the par numbers of back in here. But more importantly, as I'm stating, when this is in an uptrend, usually the precious metals go up and vice versa. So let's move on to the gold daily chart, which has had, well, I guess a move close to the 18 average of lows, not really, but A little small, decent size down move here with a little bit of correcting. Still, nonetheless, this pattern has been in a few stages of lower highs and lower lows. Previous key support, which is drawn in within this green line, is where the market stands right now. So within this decline, what I would have been looking for is how this area is going to hold as a support mark, and it's already pierced below it, showing short-term resistance, although within its time frame. Finding a bottom here with further upward move would be like, yep, it found support at that key area, just a little bit of a pierce below. The other key levels you got in around here at about 1190 something, and again at around 1180 as its previous two support handles within. If there is further decline, let's move this on to the silver market. And within its daily chart, the green line indicating price action at 1581 is at its end of the year support or lows from 2016. Of course, last week, the very decently sized flash crash over 1 minute in time at 7 p.m. Eastern time a few days back occurred, where the price fell all the way down to 14 1/3 and then has been rallying back ever since. Meanwhile, within this run, there's the 18 average resistance on its first rally from this leg lower. Then another small leg up to this 18 average, leg lower, up to this 18 average, leg lower. And now an attempt very soon to get back there again, as it's only pennies away to that key resistance point. And one of the big things in holding it, it's okay to go down. It's going to be very easy, you'd hope at least, to make a higher low from what would be a potential down move from where it stands now. But probably more importantly, this level here as a mark you would expect as resistance. That's in at around 1620 or so. But in that situation, if it does start to roll over and maybe it comes down into here, well, if that's the case, it'd be making a higher low and it would take a lot more time. But no matter what it does, whether it's going to attempt this in the near term or in many weeks from now, you gotta have a move above the 18 average like in here. And then really from that point on, hold on to the gains. As we can see in this support test here, there was your ultimate situation where a need to have its support and hold, which wasn't the case. 2 red candles down, and then the reversal of trend on the opposite side. Overall, it has been trading lately within this sideways range, and it's obviously hit a floor lower, and that's why it's at a big key resistance area field. And for myself, when these prices head lower like this, because of how much I know it costs to mine the silver, being it's not that cheap. I heard that the second largest mine closing down, and from my research, more silver is being used than is being created on an annual basis, which means that the reserves have to be taken from. And to me, a lot of this has been the price manipulation from the central bankers, that it just really entices me to purchase more if, of course, these depressed prices will continue. Because I'm planning or believing or thinking and have decided to play this on the fact that there is going to be a reset in the prices, or AKA the free market actually coming into play, and it could take significant time. It already has taken significant time, and that's really, for me, what it's worth. Now let's switch this time frame again, and this is the weekly time frame, and you can almost make a case, well, this was the area in which it was trading from for, well, even since in here, this was a not an uncommon, but a completion washout phase from this decline, and it was retested again in here. It almost or sort of was again a pierce above. But it also means now is this range of around 14 to about 16 going to be the new one? And is there any shot that even this level can get taken out? And if it does, where would it go down to? And viewing it within the monthly chart, the situation would occur towards, well, this was what would be a failed breakout, as it was an attempt to revert the trend. The supports handle situation, extended period of time, wasn't able to hold within this mark, now leaving this 18 average. Thus we can see this point in here. A lot of times if markets are going to do their bearish thing, you would expect probably a move down here back up to this point, and if it breaks below, what I'm looking for is a downtrend, and then its rally attempt. So you got this low and you got this high. The low is at 1365 and the high at 2113. If you divide these two numbers, which would be 2113 divided by 1365, put it to the exponent of negative 0.618 and multiply the low of 1365, you will get a down target in at about 1042. That would be what that next number would be. So this little area here, which would represent just a little bit of the previous test down towards here. And that would be a very interesting situation that I guess would be capable of coming into play given how this market is run. And the interesting part would be how the actual physical bullion sales would play out, as there would probably be a decent amount of people, myself included, that would be like, man, I got to take advantage of these cheap buys. But we first, of course, need to see this taken out on the situation of breaking above here. I've been talking about this for close to a year now, that would be where this thing should take off. And that's going to stay in play at least as long as this range stays as well. It's been within this mark for quite some time, but that's one way of saying that it's ready to leave this sideways consolidation that started in the earlier parts of 2014. So this is basically a 3-year sideways consolidation pattern of roughly at around the 14 handle up to about 19 or so. All right then, so let's move this on to palladium, then platinum. This is the daily time frame, priced in at 851. This previous resistance did come in as a level of support, and that's important to note because when you're seeing this on its original situation moving up here and then small forms of correcting, that's one of the first places I would state for where the best buy orders might come in would be, yeah, probably around here. And well, so far so good. The price action as it's playing out is within this 18 average. It's had this little test in here, but not that big of a sell-off, barely a lower low. And this is where it fell from this originally. For this resuming the bull market trend, it at least has to get above this point, and going sideways within this range of about 840 to about 860, and maintaining that is going to make the 18 average go sideways. So that's the next stage, and just keeping it neutral. And then if it starts to have any momentum up towards here, can we start to state, okay, there's the key low, there's a key high, there's a key low. Now that it's breaking out, we can talk about testing this previous high and maybe even breaking it. But for now, it's in the correctionary phase from this move on a couple levels because of its down price already, and it's within this 18 average from 3 small up moves. Within it on the weekly chart, this previous resistance level has been retested, and many situations in which the price action has came back to this band and then left it, or then left it again to make a higher high. There has been several higher highs along the way, but it's at this major key point. As after a huge decline, it's going up. Okay, good luck. Let's see how well you can do. And it's like, oh man, you're already back to where you came from. Now it's at a very important point. As you can even take a look at like point A, point B, key highs, key lows. There's this key high, there's this key low, retest of the previous high. If this thing rolls over even into here and can make a higher low, thus setting up a cup and handle formation, well, that's definitely not out of play. And it's not out of play that it can keep going higher. But if you're seeing momentum well above this previous high, well above 925, then this thing could have a nice serious leg higher. Now, as far as key Fibonacci levels are concerned, from the high and the low, it translates to under 700 and under 600. So therefore, a little under here and in about here. So if there's going to be any decent price corrections, this is a key resistance point as well. I'd be interested to see if 700 would translate to be such a key number that would set up the higher low on a more longer term time frame for that cup and handle. But when we look at this on the monthly, that move that we're talking about is merely a correction within the 2008-2009 rally, which has been consolidating for the entire decade, really. And it's not that far from this previous key resistance. Let's calculate the Fibonacci from this high and the low, and within such, we get some key numbers like 506 and 313. So therefore, 313 in here, somewhere close to this point, which resisted it at first, but has gotten above it. But the 500, this one's really indicative, or it's the indication of it is pretty huge. As yes, it was resisted at first with a huge pullback. Test number 2 of the resistance had a little bit of consolidation, but then after that little bit, there's the breakout of the key point, and the entire decade, of course, going sideways while that has been its key support. So that's a very bullish indication, to say the least. It also gives us the setup knowing that after several attempts, or the resistance level at where it is now, 852, is extreme. It's a big level. So if it does have that clear break, it would be a very interesting situation, especially when we've seen the crypto-like moves that this thing can have, going from like 150 to 850. It could be wild or unpredictable for me anyway to determine how big of a move could arise, of course, breaking the key resistance points. And finally, the platinum market, which on its daily time frame has been in this downtrend. We can see that this little area of resistance has come in, but importantly, this level of support was matching in here. It had an okay significant rally, and now it's retesting it again. The more likely you test it, the more likely it is you take it out. But as far as the calculation, we can do a Fibonacci downside calculation from this high and this low. And you can actually maybe be better off doing one from this low to this high because it hasn't resolved its trend. It hasn't either broken the key support or resistance level. So 1040 to about 890 will be a good numbers to use. And that gets me a down target of around 800 or so. Let's take a look at this on a different time frame. This being the weekly, and we can see the same sort of thing with the low in here, trying to break out past the band but failing. Retest of the level, lower high, back again. 808 was that number which coincides within this previous level for where if it falls down, it'll probably have a good chance of finding support at. Thank you for tuning in to today's video and have yourself a great day. Bye-bye.